Welcome back. Well, Mahindra Lifespace is on our radar now. The company reported a strong operational performance in Q4. Their bookings and volumes are at a multi-quarter high. Collections have also surged 35%. To discuss more on this and the Q4 performance, Amit Kumar Sinha, the MD and CEO of Mahindra Lifespaces, is with us. Amit, hi, good morning, and thanks a lot for joining in. Very strong operational performance in terms of booking. So can you tell us what has led to this? How is the demand situation right now? And what is the quarterly run rate that you're looking at? In Q4, it's, gone to above 1,000 crores in terms of bookings. What do you think you can do as a sustainable rate in FY25?
Thank you for having me. Absolutely delighted to share the results. It's been one of our best quarters, as you noted. Great on the pre-sale side. And I think, as you may know, we had a great launch, Mahindra Vista, in Kandivali, which was practically sold out within days. So Q4 demonstrates the buoyancy that we see in the market, especially in Mumbai, Pune and Bangalore, where we are operating. We expect the momentum to continue. To your question about how's the market, we see a strong, healthy demand. The absorption is very healthy in Mumbai. It's very healthy in Pune, and in Bangalore also. We launched one each project in Pune and Bangalore in the last 6 to 8 weeks. Again, 70 to 80% sellout in 1 weekend, both the projects. We're seeing great momentum all across the market that we are participating. For F25, we had given a guidance of 2,500 crore, but given the momentum, we hope to surpass that. It's a lumpy business. There are cycles related to land acquisition. The land to launch timeline could vary based on approvals. But we are confident that we'll be beating our target that we had publicly announced last time around, which is 2,500 crore pre-sales for F25.
Okay, that's great to hear. So you're saying that you will exceed the 25, you hope to exceed the 2,500 crore target in terms of sales for FY25. Got that. You have a development pipeline of a little over 37 million square feet. How much of that is completed? How much is under construction? And, if you can just break it up for us, where are you veering towards? Is it more towards premium or is it towards affordable?
Yeah, so I will just keep it simple. Just from a million square foot gets sometimes confusing. But historically, we have played a big role in affordable. But over the last 2 years, and especially after I came on board last year, we have focusing a lot more on mid-premium and premium in line with our brand promise, brand expectation, and the target customer segments. And the reason it makes sense is because the per capita income is going up, the land prices are going up. It just makes sense for us to create dream homes which matches our target segment. So we will continue to look at affordable, the commitment we have made, the projects are already going, and we'll be looking at those projects as and when they come along. But our focus will shift from affordable to mid-premium to ideally more and more premium. In terms of where the value will come future, in terms of million square foot, I would give you a better indication in terms of the value of the project, the sales value. I would put 80% of our future projects will be premium, at least in the next 3 years, and 20% would be affordable, which we have already committed to.
Okay, all right. Hi, Amit. Good morning and good to see you in. Nigel on this side. You've been increasingly sounding very, very optimistic about the sales numbers. So I guess operationally you got things in order. But let's focus a little bit on the balance sheet. Your debt is not too high. Net debt, I think, is around 550 crores odd. But since you've got such a big pipeline that's planned out, what will this debt number look like? That's point number one. And I think you had a 50-acre land in Chennai that you had planned to sell. When does that take place?
So let me start with the second one. We have a huge land parcel as part of Mahindra World City, Chennai. And the one part is industrial, the other is residential. The industrial business model is we do the master development, which we have done in Mahindra World City, Chennai, as well as North Chennai, which is Origin Chennai. And our business is to attract, let's say, global MNCs who are looking for manufacturing facilities, which are kind of plug and play, industrial park. So we're always selling land as part of it. The 50 acre that you might be referring to is the residential part of the world cities as well as origins. The way we are thinking about, instead of selling those land pieces, we are doing plotted development. We have done 2 in the last 12 months. And we're also looking for additional high rises where the economics make sense. We are not trying to sell those pieces to third party or any other developer. So that's on the Chennai question. On the balance sheet, I think you're right. We are very thoughtful about our debt to equity ratios. So I think our goal is to be as conservative as we can be. But for growth, you'll need capital. And given Mahindra Lifespaces has been designated as a growth gem at Mahindra corporate level, Mahindra group level, we expect the support in the form of equity or even debt to come from the group. Ideally equity, because it aligns very well the nature of this industry. We've just started the discussion on raising a platform that could be with support from, let's say, external fund providers, and those discussions just started. The first year for me was to get our house in order, clarify the strategy, demonstrate how we can operationally show strong wins in the early stages, and then raise the external capital. Our preference is to get equity because it, as I said, aligns very well with the nature of the industry.
So, sorry, what is this platform for, Amit? Morning. This platform that is in the early...
Yeah, the platform, we have done a couple of them already. We have done one with Actors, we have done with HDFC Capital in the past. So this platform is for residential projects. Residential projects have a upfront equity requirement because you're trying to buy land parcel. So this is for that. It's just, the efforts have just started, but we're thinking bigger in terms of how we get equity in the company to support our aspirations.
Sure. This is beyond that 50 acres in Chennai that you spoke about, right?
It's very different from Chennai. Yeah, it's very different from Chennai.
All right,
yeah.
Fair enough. Any new sort of redevelopment projects in Mumbai in the pipeline, which we will hear about?
So there is a lot in the pipeline, but we have a very high guardrail for saying yes and no to these projects. So we are, I think, 2 in the pipeline that we are close to finalizing. Finalizing meaning the societies are in the process of finalizing. We are anxiously and putting our best foot forward. Let's hope they happen. But our goal right now, we want 2 in the last financial year or just around that time. Our goal is to bring them to market at the earliest now.
Okay. All right. Amit, we'll leave it there. Good luck. Thank you very much for your time. Appreciate you joining in with some of that perspective on CNBC TV18. So pre-sales should be over 2,500 crores, as you said, for FY25. And this is better than what they'd said earlier.